All right, everyone, welcome back. Today we're taking a look at Lucid. Lucid Motors' 3 billion stock sales signals a brighter future for the electric car brand. Now, let me just say, the big question is, can this money save Lucid? Can it save the company? That's what we want to look at today primarily. Now, we'll be reading through this article that I wrote. Check out the article, by the way. It's on our website. There will be a link in the description. It's on Monument website. Hope you enjoyed. And remember to subscribe to our newsletter. That's how you get our latest updates on articles and videos. Now, a 3 billion equity offering will be carried out by Lucid Group, with some shares going to the Public Investment Fund, Saudi Arabia's sovereign wealth fund. Now, in order to finance Lucid's first production car, the proceeds of the stock offering will be used for capital expenditure and working capital. Due to the increase in outstanding shares, existing shareholders may experience dilution as a result of the capital offering, which may pose a short-term threat to the company's valuation. Lucid Group has seen its share price crash significantly from an all-time high of $60 as investors become more wary of the firm's production car's launch. Doubts have been further solidified after Lucid had to reduce their production forecast 3 times during the fiscal year of 2022 and the fiscal year of 2023. The EV startup announced an enormous stock sales that is worth $3 billion in order to support the launch of the Lucid Air. They're already delivering the Lucid Air. However, they would like to deliver a lot more. They'd like to produce a lot more vehicles. And right now they're at a limited capacity. And that's creating a lot of problems for the company. Now, this large amount of capital raising could potentially create further valuation pressure in the short term, which is exactly what I need. I need the Lucid share to go down. Now, in actuality, if this is successful, there will be a little bit of a dilution. Now, of course, the share price might in fact go up, but you know how the market is. You know how the market like to anticipate and react. Short term, the share price could go up, but long term, the share price could come crashing down. Now, Lucid plans to raise this money by offering $3 billion worth of shares. This all encompasses both public and private investments from Saudi Arabia's Public Investment Fund, the PIF. This offering includes 173.5 million shares being sold to the public for a total of 1.2 billion, as well as an agreement with the Public Investment Fund affiliate AR Third Investment Company, which purchased 265.6 million shares of the common stock from Lucid for a gross proceed of $1.8 billion. Now, this investment firm named AR Third Investment Company owns around 60% of Lucid and has contributed to its stock sales earlier. The $1.8 billion investment is equivalent to 60% of the firm's total equity offering to the Public Investment Fund, stayed consistent with its 60% stake in Lucid, maintaining proportional ownership. Additionally, Saudi Arabia sealed a deal outlining terms for delivery of up to 100,000 electric vehicles over the next 10 years. The agreement between Lucid and Saudi Arabia consists of initial 50,000 EVs purchase commitment with an option for an additional 50,000 EVs. As opposed to other EV manufacturers like Lordstown, Lucid is not under any serious pressure to raise liquidity. At the end of the first quarter, Lucid had $3.4 billion in cash value. Lucid had $3.4 billion in cash available, plus $700 million in additional credit facilities, and a very solid balance sheet. Now, if I'm saying all of this, you're probably wondering, well, what's the problem? If they've got all of this money, what's the problem? What's the delay? The problem is their factory where they're building out of, it's at a limited capacity. Now, as the years go on, they'll ramp up and start to making more vehicles. But truth to be told, they need bigger factory, bigger infrastructure, more factories, more infrastructure throughout the US, throughout the US. Considering that Lucid vehicles are super expensive, I don't think they need a factory immediately in the European market. I think they can just ship those vehicles abroad. Until they start building more vehicles that are more cost efficient, then they can get a factory in Europe. But for now, I think it's a little bit unnecessary. I honestly think that they need another factory in the United States, and it needs to be far bigger. This factory needs to be able to handle a capacity of 2.5 million vehicles on a yearly basis. That would be very positive for Lucid. Very positive indeed. And like I said, these vehicles are not cheap. These vehicles are the price of Porsches. Lucid vehicles are not cheap. Now, Lucid Capital raise is not a small one. With a market cap of $4.2 billion, the $3 billion the firm is expected to raise represents approximately 21% of its current value. A capital offering is usually a negative catalyst for company share price, since existing shareholders will be diluted as more shares are issued, which is why Lucid's share price fell by 5% after the equity offering was announced yesterday. Now, Lucid may have experienced a slower start than expected, yet long-term potential in the EV industry remained very promising. As more companies launch their products and issues related to range and cost are addressed, Lucid could become one of the front runners. Despite an initial setback, the future looks brighter for the electric car company, and Lucid prospects in this space may still be significant. Now, I'm saying this long term, the next 5-10 years for Lucid. It's going to take a long time for Lucid to be selling 100,000 vehicles. Seriously, even just selling 50,000 vehicles is going to take a few years. If they do deliver on their promise of selling 10,000 vehicles this year, can they double that capacity by next year? Furthermore, could they triple that capacity? Because they need to. They really do need to. But considering that Lucid is a company that's supported by such a big investment fund, I don't feel like that they're under pressure as much as we think they are. It feels more like Lucid is taking their time, and they can afford to take their time. And honestly, I understand that. But I want to see this 10,000 vehicles get delivered first. And most importantly, I think this company is way overvalued at $14 billion. It is significantly overvalued. Lucid is basically almost twice as valuable than Polestar, and Polestar delivered 50,000 vehicles last year. They're looking to deliver 60 to 70,000 vehicles this year alone. Just imagine that for a moment. This is why I keep on reminding people Polestar is incredibly undervalued. Right now, Lucid is incredibly overvalued. Well, perhaps not incredibly, but it is overvalued. Seriously, delivering 10,000 vehicles, if they do that this year, that would be good. Yes, that would be a good way to start. But seriously, they still shouldn't be valued at $14 billion. So I'm waiting for the share price of Lucid to go down a bit more, then I'll buy. Now, like I always say, this is not financial advice. It's just my opinion. But I am waiting for the share price to go down a bit more because I like the company. I think they've got great potential, but they're too expensive right now for me. The only thing I do right now is just buy one Lucid share just to get my emotions involved. You know, once I'm emotionally invested, I'll pay a lot more attention to the stocks. I'll pay a lot more attention to the reports and all of that stuff. But honestly, there's been some rumors lately. Apple, Lucid, could there be an acquisition possibility? The only thing is that when Apple is acquiring a company, it's usually silence until it happens. So I don't think it's going to happen with Lucid. Now, Lucid is a public company, so Apple could literally hostile takeover and buy this company. But for $14 billion, they'd probably buy Polestar instead because Polestar is cheaper and it's more valuable. The positive that Lucid does have is that Lucid do have a factory in the United States, which is really fantastic. Good for Lucid. But looking at the share price right now, $6.82, the market cap is actually reduced to $12.5 billion. And that's mostly because of the news that was recently announced. Yeah, that news really took the market by surprise. 12 billion in market cap, that's more reasonable, for me at least. But it's still not enough to convince me to buy yet. Like I said, I'd only buy one. You know, something important to remember is that Lucid is building a factory in Saudi Arabia. They are. They're building a factory in Saudi Arabia. And honestly, that could supply the Middle Eastern countries, such as the UAE, Saudi Arabia themselves, Qatar, and perhaps further countries closer to that region. Now, as for Lucid Arizona factory, this is what the factory looks like in Arizona. 2019, it was just under construction. November 2020 came online. And since then, it's been slowly selling vehicles, slowly manufacturing vehicles. But nevertheless, it's a positive. But, you know, if we take a look at Rivian delivered around 20,000 vehicles next year. I'm way more bullish on Rivian because they're an American company, just like Lucid. And Rivian is taking it a little bit more serious. Rivian is delivering a lot more vehicles, and Rivian is also selling vehicles that are in high demand in America. So my confidence in Rivian is quite high. I like Lucid. I just think this expensive sedan, it's a bit hard to sell. I think they desperately need that SUV, the Lucid Dream, but most importantly, they're going to need a cheaper version of that car, like a Model Y competitor. And Lucid will need a Model 3 competitor. If Lucid gets that within the next 5 years, I think they can do really well. But this is a small factory, as you can see. It's a small factory, small footprint. It wasn't easy to build, but I think they need more. They either need to expand on this, and you know what? They should have built this factory with the idea to expand in the first place. And honestly, that's what I appreciate about Tesla and Elon Musk so much. When they build a gigafactory, they build it with the ambition to expand. That's why it's always built in a straight line. It's just a long building that you can always expand on, or you can build the next one next to it. But this factory, it's an older version. But this factory, you can see it's an older way of building factories. You got the buildings separated. While with the Tesla factory, it's all under one roof and it's just a seamless, functional society. It's perfect. But I'm giving Lucid time. I want to be patient with Lucid. But that is it for this video. Thank you for watching, subscribe, and I'll see you in the next video. Peace.